Now taking a look at shares of Lululemon, they're up right now by about 1.2%. The athletic wear company going to be reporting its Q2 earnings after the bell today. Investors are going to be looking for further guidance here as cautious consumers and more competition have led to shares falling almost 50% year to date. For more, let's welcome in Jim Duffy, good friend of the show. He's Stifel's Managing Director of Equity Research and Analyst for Sports and Lifestyle Brands. Jim, great to have you back on here. So let's tee it up here. For Lululemon, we've already been looking across the retail environment and trying to figure out what a more cost-conscious consumer and a consumer that's looking for value hacks will spell out for this company. What's your estimation? What's your anticipation here?
Yeah, hey, Brad. Thanks for having me back on the program. Super interesting quarter that Lululemon's about to report. As you mentioned, the stock down about 50% year to date. They've had a product which they had to pull from the shelves, a product line called Breeze Through, which creates a hole in the merchandising assortment. So we think it's broadly expected that there's going to be a reset to the outlook. We, however, want to buy the stock ahead of that. This is the best economic model in my coverage universe. We are believers in the global trend of greater concern for health, wellness, fitness, self-actualization. Lululemon uniquely positioned to lead that trend. The prevailing narrative here is that Lululemon is done growing in the U.S. market due to competition and some other factors, but we don't believe that's the case, and we think this is a good opportunity in shares.
So you're very bullish, it sounds like, on Lulu. Now, personally, I'm a customer. I have gone and I've purchased products from Lulu. However, I always note how expensive their brands are and how you can often find very similar types of clothing at other cheaper retailers out there. So when we talk about this cost-conscious consumer that Brad was just alluding to, is the pricing too high for Lulu? Is the competitive environment too great at this point? And what are the biggest risks in your view?
Well, first off, I'm glad to hear you're a customer, Alexandra. The pricing, that's been a concern on Lulu, and competition has been a concern on Lulu for as long as I've been following the stock. The key for Lulu and the key to their success is innovation and the quality of the product, which distinguishes it from alternatives in the marketplace. And we believe they still have that. What we see from consumers is a willingness to pay up for quality, a willingness to pay up for innovation, and a willingness to pay up for newness. And where Lulu may be lacking some now is on the newness front, but that's a fixable problem. We expect they can address that in the merchandise assortment in coming quarters.
It's really interesting. That's come up for a few different brands here, not just for Lululemon. Newness is what I'm talking about here. That's come up for one of their biggest competitors as well, Nike. They came out with their earnings, and of course we've been tracking that. Stifel recently released their back-to-school sneaker survey. What can you tell us about Nike's market share in that department here, as we're going to be tracking Lululemon up against what we had already heard earlier and kind of precursor to the earnings season, if you will, from Nike?
Yes, last week my team and I conducted the Stifel annual back-to-school survey. We have over 20 years of data tracking trends between different product categories and different brands. And the good news is that the marketplace is generally healthy. There's a lot of newness in the assortment that consumers are responding to. Our checks are showing traffic healthy and inventory balances at retail healthy. The bad news for Nike, however, is there are some other brands that are bringing newness and getting momentum. Nike's share of popularity fell from 88% last year to 61% this year. So quite a steep decline on a year-to-year basis. They are, of course, still the most popular brand in the assortment, but we saw strong gains from New Balance and also strong gains from Adidas. For New Balance, their 16% of most popular shoe references is the highest that that brand has ever registered.
And Jim, you currently have a hold rating on Nike, but you did lower your price target to $79 a share, below where shares are currently trading. What's the pivot here for Nike to regain that dominance?
Yeah, it's a great question. The reason for adjusting the price target lower was based on these checks and the momentum we're seeing from competitors. We think a turnaround is going to take longer to execute than is currently reflected in the consensus estimates. the path to recovery here, newness has to play an important role in that. What has made Nike great for years is innovating and designing exciting new product, and then having compelling marketing that gets consumers excited to engage with that product. And we think they've hit a bit of an air pocket in that execution in the near term.
All right, from sneakers here to clogs. That's what we're focused in on here as well. Here, closing out with Birkenstock. I mean, Allie, you've been tracking this one. You were talking about this one this morning.
Right, yeah, shares are down about 14% right now. So, Jim, their profits fell short of estimates last quarter. What can they do to get back on track? Is it new innovation? What's the go-forward strategy?
Sure. Well, I don't necessarily believe they're off track. The stock was priced for perfection. And expectations were high going into the quarter. Myself and others expected them to over-deliver on the quarter and raise the guidance. Indeed, they did over-deliver on the EBITDA line, but they did see some deceleration on a sequential basis relative to the fiscal second quarter. All indicators in the marketplace are that appetite for the product remains strong. Inventories in the marketplace are well managed. I think it's just a temporary setback in the stock.
So, all of these things considered, I mean, we've been talking a lot about everything from athleisure to what is a little bit and far more leisure in Birkenstock at least. Who is best positioned right now from your perspective, Jim, to navigate a very uncertain consumer environment, even as we get into the back half of the year, where we've heard from Foot Locker that there could be some heavy promotional pressure that needs to come forward?
Yeah. We keep bringing up the subject of newness and innovation, but it's those brands that are really bringing compelling and exciting new product that's driving consumer engagement. As we think about the consumer macro backdrop, the consumer is becoming more discerning. We do think they still have good capacity to spend in discretionary categories. They're just being more selective about where they're allocating those dollars. Those companies like an On Running, like Birkenstock, that are bringing excitement to the marketplace, we think they can continue to drive growth.